So let's just jump over to CitiVest.com. So CitiVest puts money in highly selective real estate private equity investment funds. Okay. And so they have deals listed, available, and you can go sign up and invest. So here are some of their past deals, for example, that they've done and that they've closed on. They've already raised the money and they're done. Okay. So we have this one, Amrock, wherever this is, they're raising $250 million. So that's a pretty large project, as you can tell. Multifamily, right? Looks like big apartment units or condos. Quarterly distributions, which means cash flow is going to be coming quarterly. They'll send you money. Minimum investment is $25,000 and internal rate of return, the target is 18%. You look at this one, K-cap, 25% targeted internal rate of return. Internal rate of return just encompasses appreciation in the property plus the cash flows, because cash flows are coming out. Appreciation happens when they liquidate the property at some point. So that's the internal rate of return is 25%. They usually put that as an annual number. Okay. So fund size, they raised $50 million for this. Multifamily, quarterly distributions, minimum investment $25,000. So let's see if we can learn more about this property. So here we go. The summary, right? Amrock Access Fund LLC. So here it is. It's a fund. And you see the summary, strategy, due diligence, the team, and the track record. Okay, and they have all that in here. So there's a video you can check out, and then you can read through all of this. So performance, 28.7% average IRR on realized investments, and a 2.6x average cash multiple on realized investments. So they are 2.6xing your money based on their past investments. Over 100 years of investment experience, 450 team members, $3 billion in projects, 125,000 multifamily units purchased, etc. Key considerations. Here are their people. So here's their auditor, an accounting team, legal counsel, and we've got Juniper Square is fund administrator. And then, here are the vendors they use to offer it as a service provider, offer it to investors. And here you go. So you can kind of check out all of these details and you can say, hey, I want to invest now. Here we go. We're moving on this, right? So all of these are closed that I can see, but you might have to sign up to find out current deals that are open, but they're just kind of giving you a taste what this might look like. So Claremont Access Fund, here you go. They've got a video, talk all about it, give their pitch, right? You just start learning. So the best way, by the way, the best way to learn about this stuff is just to dive in and actually say, okay, what if I invest in this? I'm going to analyze this. What are the things I'm looking for, right? Look at a lot of deals and see. Now, some of these, I'm not totally sure on some of these deals because, maybe you have to sign up again to get like all of the details. It says a 25,000 minimum investment, but I don't know if you have to be accredited or non-accredited. I don't know. The fact that it's public like this makes me think you have to be accredited to invest in this type of thing. So that's one thing that you have to find out in your due diligence, okay? I'm just going to show you one other place. There's a lot of these websites, again, you can look it up and just start looking at deals and seeing what's out there. But I'm going to look at another place here, HoldFolio. They do smaller deals and they've done a bunch of them at this point. So past offerings, there's 34. One they have open right now, and here you go. But reservation size, right? They're not raising as much money. These are smaller units. It's not quite institutional size. It's like a step down from that. But they've done 34 deals before. And here you go. So let's look at this past offering and just kind of talk through some things. So Noble on Newberry, it's a 1031 exchange, which I'll cover in a future video, probably in the tax module. But let's look at the details here. So offering size, right? That's the amount that they're raising. Minimum investment's 20,000. Cash on cash return is 7.1 to 10.5. So remember, we talked about cash on cash. So if you put in 20,000, you're going to get 7 to 10% of that annually back. And then based on what they're able to do to the property and sell it for, appreciate it, they're probably doing a value add here, is my guess. So they're going to go in, maybe do some renovations, maybe spruce things up, increase rents, right? Do better marketing, whatever it is that their plan is to increase the value of the property. And then they're going to sell it or refinance the property at a higher valuation and then return investor money. Okay. So overall, with the cash and the appreciation, they're looking at a targeted IRR of about 20%. Pretty good. The term is 3 to 5 years. So they might pull this off. And when they sell, it just depends how things move along and what the market looks like, right? If it's not a good time to sell, they might hold on to it a little longer. If it's a great time, they might sell it. 3 to 5 years. And yeah, so let's just look at details here and see if we can find out kind of what their strategy is going into this. So they have a bunch of photos. Looks like a great place, really nice, really modern, great location, great pool, right? So what this is, newly constructed best-in-class luxury multifamily property in Central and North Florida market. This is their 6th active investment with the Collins Group. So it looks like they've worked with this group before and they know them well. And so they understand what they're getting themselves into. One of them is pending a sale and it's estimated to double their money in less than 2 years. Okay, so that's pretty good. So one of the other properties they ended up selling it, or they're about to. It's pending sale and it's going to 2x their money in 2 years. Pretty good. So it gives you some information about it, why they like it. Okay, this is their investment thesis. Why is this good, right? So it's brand new, class A+ property, desirable market. It talks about all the amenities. It talks about why they like the area in Florida and specifically that region, right? They like Gainesville, close to university, so close to a ton of students, lots of jobs, top tier market as far as, it's in Gainesville, so it's close to Jacksonville, Orlando, on and on and on. Okay. Talk about average household income, residents. So they do all the research. Do you understand? Like that's their job, is to go out and find the best areas that are going to make them money. And the thing is that they are going to profit. They're incentivized to make really good deals because they will profit right alongside their investors. Okay. The more money their investors make, the more money they make. That's just how it is. And so they have right here 7% preferred return and a full return of investor principal before sponsor participates in cash flow. So what that means is they're going to start distributing principal 7% cash flow. And they, as the sponsor, HoldFolio, they're not going to take any of the cash flow until their investors have received all their principal back. Okay, so that's good. Annual cash flow and then annualized return, strong track record, on and on. Okay, so this gives you more information. You can obviously schedule a call or whatever you want to do. But that's how these deals are put together. They have to sell you as the investor. They're selling you and saying, hey, give us your money. We're going to make an investment and we're going to make a ton of money. And this is why. So they do all the work. They create the investment thesis. They create the strategy. And then they bring the opportunity to you. Okay. So that's it. HoldFolio is nice. There's a ton out there. So I'm not recommending any of these necessarily. I'm just showing you as examples what is out there and what you can look for. But there's a lot of deals to be done. And there's a lot of people with high expertise in this area. And if you want truly passive income, putting in a fund or a syndication is great. If you qualify, if you can meet the minimum investment, right? That's the caveat. If not, maybe do some of the crowdfunding real estate platforms where you can do less, like a lower minimum. Works out well for that. All right. Okay. That wraps up this video. See you guys in the next one.
The more you understand money, the more power you gain.